Welcome back to the channel where we try to show you that trading is as easy as you make it on yourself. In this video, we're going to go over a couple of the trades we looked at about 2 weeks ago, and of course, do a little bit more analysis on a few things that may be setting up now. Just in effort to show you that trading is so much simpler than most people make it. The mistakes that are being made are completely solvable and completely overcomable. So, of course, without further ado, we have to at least acknowledge that do not trade what you cannot afford to lose. I practice high risk, high reward trading, and most of the things that I do, you can follow along with simpler, lower lot sizes, safer risk to reward methodologies, and still have loads of success. Please know that everything we discuss in this call in terms of a pip, we know that we know that we know. A broker, from broker to broker, they're different. The pair from pairs to pairs, they're different. But to normalize this, we're going with the average $10 per standard lot, which is kind of standard across the board for most of the instruments. We know that it does vary, but just to paint a picture of what this is actually worth when we say, hey, we've got blah, blah, blah amount of pips. So let's take a look at what we've done so far, and then we'll go over to the charts. Many of you know that we've been using this spreadsheet as a way of kind of tracking what we've been doing live on YouTube. Of course, we do something kind of comparable behind closed doors in terms of the companies that I work within. Let me just zoom out for a second. We use this as a way to say, what are the trades being called or discussed in class, the live trade analysis, right? And how are they performing? What are they doing? So, of course, this is for this year. This is mostly indices. That's why the pip count is so high. We already know that. This is our morning classes that are kind of part of the membership alone. We started doing something very comparable. Ugh, I wish that view was a little bit better so we could see it. Anyways, here we go. We started doing something a little bit comparable in terms of what we were doing live on YouTube. Not to present or push any strategy, any management style, any indicator, any of the things that most people get lost in the sauce with. There's such a plethora and overabundance of information, some of which is really, really good and it's meaningful and it's helpful. But at the end of the day, too many people are getting completely lost in the sauce, and then they're not profitable, they're overtrading, they're making a mess. So this is not meant to be perfect. It's not meant to be this perfect picture, if you will. It is meant to show you that you can still be profitable with wins and losses and a really basal system that literally tells you everything you need to know. So all the predefined rules of how we're managing what we're doing and how we're doing what we're doing is predefined. We're doing this together as a group. Live on YouTube, you have a chance to go back to any of those videos. Last week, you can see we had kind of a rough week in terms of wins and losses. Look at the week before, we had no losses. Look at the first week, tons of losses, right? This is kind of real trading. But let's take a look. These are the 1, 2, 3, 4, 5, 6 trades we looked at. A couple of them went perfectly into profit. Obviously, this indice really saved the day. Most indices tend to do so for me. Lord only knows why, but that just seems to be my strength in terms of getting all those pips. But let's take a look at what that actually equals. We know there's variables from broker to broker, and there's a different value for pairs. Like odd NZD, for example, is not worth $10 per pip. Indices are typically worth a lot more. And you guys get the idea. USD pairs are all worth $10 per pip. But instead of trying to choose a lot size, what we went to was saying, hey, regardless of the broker you're using, on average, you're probably doing something like 10 cents a pip, $1 a pip, $5 a pip, $10 a pip, for example. Mind you, indices are worth a lot more than that. But to give you an idea, each one of these weeks has 20 minutes, 20 minutes, 20 minutes, 20, and 20. So 5 weeks at 20 minutes apiece. We're less than 2 hours of actual trade time. So now I'm going to zoom in and try to make this a little clearer. This week, we averaged about 2,000 pips. Granted, that's because of this nice indice we had saving the day. But what did that actually equal? At your lowest lot size, you still made $1,400 this year in about 2 hours of your time. Now, granted, yes, you have to have the capital in your account to be able to handle this kind of thing. Yes, you would have had to get every single trade and lose 100% and gain 100%. But let's not do that. Let's look at this from kind of this middle ground, knowing that this is a lot closer to the lot size most people are going to be trading here or here. You're looking over 14,000. Even if you missed some of these trades, decided not to, took 100% of the losses and only 50% of the wins. You closed out at 50% of these. You still made more than $7,000 in about 2 hours of your time in the last couple of months. And again, the standard lot size is called standard for a reason. That is this right here. That's $10 per pip. Please take a look at that. Look at what that makes your time worth per hour. But I'm not going to spend a whole bunch of time going through this. I would completely get lost in the sauce just trying to explain this to people. Please notice before I even pop off of this, I did not start these videos to show that something was perfect. I started to show that you could be profitable with consistent management, even with an imperfect accuracy, even with all over the place results, even with only trading 20 minutes twice a month. That's it. And that's what we're setting out to prove. But let's go take a look at some of these trades. We've got these from last week, and then of course this morning that I'm going to take a look at. Typically I do these calls on Tuesday, the first and third Tuesday of every month. I might be switching it up. So for those of y'all who are watching and who have some feedback, if there's something specific you want me to cover in these classes, in these videos, please do let me know. I'd like to help and just make the impact that I am here to make to the best of my ability. So let's go take a look at these charts and see what we've got, how these all performed, and then of course take a look at a couple of new setups. Please consider taking these in your paper trading account. It costs you nothing. You can go to my link tree in the YouTube, download any of those brokers, not download, but sign up for any of those brokers. Sign up for a demo account, costs you literally nothing, free on YouTube. You can get lost in as much sauce along the way, but just try these trades in the way we're saying to manage them, right? For literally just a couple of months. Costs you nothing to see if this skill set is something that can potentially change your life. But let's go take a look at these trades. Alrighty, so we know that we went over 6 trades on, what was that? Approximately 2 weeks ago. I totally forget what date was, the 21st. We know exactly what we were looking for. We know the criteria we had set. And yes, we were looking for this sell. This sell did activate. So this is 3:21 of that 7 o'clock hour. So you can see we did activate in this range. Of course, we came up and swung and made a higher high. This never played out. So this is officially a losing trade. Not the end of the world, just to show, hey, this is plausible, possible. If you stick with it, it's okay. We can have those. So I'm going to take that off my watch list now. Just going to go through and review, right? Hold this system accountable, but also hold your management accountable. Here we are. This is not pretty. Anyways, USDJPY was still looking for that buy. We swung and made a lower low. We came back up, but are failing. We've had the change of characters multiple times, but we really haven't had the continuation. We really haven't seen this take off the way that I was looking for it to take off. It's okay. So here's where we were at. Yes, we activated. We knew we were going to be getting a pullback. Activated, but again, made a lower low. So no hard feelings there either. This is a marathon, not a sprint. I'm going to end on USDCAD because we got a new trade there. The magenta kind of purplish color are the ones I'm looking at for this week. So I'm going to keep skipping right along the way. Australian 200. Here's where we were at. We knew we wanted a bit of a pullback. Took the pullback, never made a lower low. And so far is up over 2,500-ish pips. I think I clocked personally 2,400. Not a bad way to be. Notice that's $6 per pip. That's not bad at all. Well, almost 672 per pip. This, and 2,000 pips is a lot. That's a lot of pips, guys. You guys can do the math on that. I am looking for more of a retracement on this today for those people who are interested and who are really tracking these indices. But this was one of those great trades, over 2,400 pips bagged and collected. Cool. JPY. This one's a little tricky. Here we go. So 321. We were waiting for the breakout at that green line. So we have got that marked up. We got that. We know we're always protecting within 50 pips for 1 ATR. If my blue circle would get up out the way, you can see this moved 55 pips before ever making a lower low. That's a winning trade. You should be managing your trades in a way that says, at this point, I will protect, I'll close some of my profits, I'll get out of the trade, I'll put my stop loss in the profit, I'll apply a trailing stop. But you should always be making some kind of actionable decision when you've got that much in profit. So overall, not horrible. Yes, of course, continue to swing lower, unfortunately. But we're clearing the board on this one too. Ta-da. And I think one more after this, because we've got USDCAD. Same thing here. This was a bit tricky. So, bit tricky. Where are we? 321. We came up, no fun, and then all the way back down. This was actually the pair, ironically, which is not worth very much in terms of pip value. I lost more on this pair than I did on any other pair from that that set of trades, if you will. But again, it's not about a singular trade. It's about the big basket. It's about all of the trades all together. So there's that. And last but not least, we've got USDCAD. We were looking for a buy. all the way back here. You can hardly see it, and see it over here. It's at 1.37143, 1.37143. That's where we were looking, actively in, etc. so forth. So that's going to be right here. Okay, we're actively in this trade. Remember, we are saying you are protecting the trade no matter what. If you've got 50 pips or a couple of ATR, we've got multiple ATR and we've got almost 100 pips. You should have made the decision that says, I'm going to apply my trailing stop. I'm going to lock my profit. I'm going to close a portion or some kind of actionable trailing stop, automatic management, whatever you see best is totally fine. But yes, some decision. With that said, of course it tanked. This has been, such a thing. Continuously to the downside. So beautiful wave to the downside. Notice how this is colored in that kind of purple color. So what does that mean for today? Today, it means I'm looking for, let's zoom in a smidge. I'm looking for this to give us that buy. So as of right now, what we're doing is at the break of this fractal, I'm going to go ahead and make my line. Make it green and perforated. It's amazing I can get that word out without messing that up. So there you go. So at the break of this fractal, I'm looking for the continuation. If, of course, we zoom out and we just take a look at the overall risk to reward. I've got this nifty little smart tool over here that shows me some things, but I'm going to move this down, okay? Beyond this fractal, of course, you can make it the lower low. Figure we're going to get a reaction in this range. Let's see what this equals. About a 1.7 to 1. Not a bad way to be, but in general, I'm looking for it to come fill these voids all the way up into here. And there's much more room beyond that. We're at about a 4 to 1. And again, I typically have my stop loss below actual structure plus some room. So you're still averaging approximately 3 to 1 risk to reward ratio. Not a bad way to be. So yes, in terms of this pair, super excited. We'll see. There are no guarantees. You're always protecting within 50 pips no matter what. That's trade number 1. Oh no, I have to take this off my watch list. Man, okay, so I marked this up and then I was sidetracked in my office. This is already taken off. I cannot take an entry from here. It is what it is, so we're going to take this off. Boo. Okay. Prior to this having moved so much, I was looking for this sell. It has already moved too much for us to take it. For those of y'all who are more active traders, we're at this nice area of interest. Of course, you can wait for this to retest that 1200-ish pips and see if we get another leg to the downside. But I definitely cannot call a trade idea from here. So that's out. Sorry, I had not looked at it in the last, that's quite some amount of time. No fun. It's off of our watch list. I will remove it from our spreadsheet as well. No bueno, but it is what it is. CHFJPY, same story. Here was what we're looking for. We're sitting right here now. We've got the active break. We've got some nice structure to the left, so I'm looking for the sell. So I'm literally going to draw up my little line. I'm going to make this red for a sell. Red, red, red. And how you're going to manage this is not as complex as most people think. It's really, really simple. So I'm going to zoom in. When we break below here, I'm going to have to go to the body of this candle because I need something that's consistent. We've already got that fractal over there. I'm going to have to put it right here. Please notice, and I'll write this on my little spreadsheet too. That's the 1800 hour. This is the time that we're making this on April 5th. So we break beyond this. Yes, I'm looking for a sell. How I would be managing this is looking at overall structure to the top. That's going to be my stop loss. I'm always protecting within a couple of ATR or 50 pips, one or the other, whichever comes first, no matter what. And of course, you have the option to use automatic management. So what does this look like? If our stop loss is up here and we're looking at least into this range, give it a second to catch. No, doesn't want to listen. Come on, Linda. Hold on. 1.44. So you're still better than almost a 1.5 to 1. Not a bad way to be. I, in general, am looking for a bit more than that. I think that this trade still has a lot of potential in terms of looking at the other pairs. It's not a bad risk to reward. And for us to come into this range and at least get your 50 pips, yes, I think that's a high probability. And if you pop up some time frames, you'll see that you're sitting really, really high. So we've got our impulse, our correction. We've came down and failed to make a lower low. So just coming back in to test this range. If we break these lows, we've got quite a bit of way to go. If we don't, of course, we know we're just going to look for that next intraday buy back up and then keep doing it over and over and over again. That's all. No magic sauce. It's super simple. EURJPY is next. Man, these took off from where I marked them up. They already took off. Same story here. I'm going to have to say nope on this one. We've already moved 100 pips from where I was looking at it. 100 pips is a bit too big of an ask. We've got a couple of huge big candles here. So that's okay. We're taking this off our watch list. If you are an active trader and are looking for this to be an entry, I'm going to go all the way up to the daily, take a look, zoom out, look at where we're sitting currently. So we've failed in daily high yet again, coming back into this range. Not a bad way to be. You have some room, but I cannot call this as one of those trade ideas because I think it's already moved a big portion. So if you're an active trader and can wait for that pullback, by all means, you do you. Got another 200-ish pips. You're looking a little bit less than a 1-to-1 from where price is currently sitting, but if you wait for that retest, you're going to average that 1.25 to 1, give or take. So not a bad way to be, but we're going to remove that too. Woo! Get 3 trades. I can live with this one. I can live with that. GBPCHF daily time frame, take a look at where we're at. We're sitting in the middle range of this daily time frame. So let's come all the way over. Got our nice impulse. We did make a higher high. We've come down, wicked up, nice little spring formation. Now we're pushing down. We are still staying above the daily 50. All the way down to the 1 hour. We've got a nice little simplicity sell signal, right? We have moved a hefty amount. We're sitting at this kind of Fibonacci hot zone, if you will. So what about at this very second? Same kind of analysis applies to where we can look for this pullback up. But in general, I'm still seeing the potential of a good 180 to 200-ish pips on the table. Not a bad way to be. Now, granted, I would like a bit of a pullback into this range before I try to sell it down. But of course, you can take it at the break. So I'm going to go ahead and put this here. That price point is 1.12611. 1.12611. That's what we're looking. And then just sell it down. Not a bad way to be. You've got your simplicity. You've got a couple of other things going on here. You have retested this area. So of course we can get the bounce back up. You really want that smaller time confirmation on this pair. And that's it. There were a couple of other things that I kind of liked, but again, they had already moved too much for me to say, hey, this is a comfortable area to take it in. Not that they don't have potential, because they do. One of the ones I was looking at is gold. There's no simplicity signal in gold. And that was kind of the purpose, to show that you could use this system. But gold's not a bad way to be, just to retest into this imbalance we've got here. A lot of pips on the table, great risk to reward. Just to give you a little analysis for discussion purposes. Quite a bit of a ways to the downside that I think needs to be retested before we continue making higher highs. So again, if you're an active trader, come track this trade. You've got that option as well. But overall, I think that's about it for this week. I unfortunately am going to have to take off EURJPY and NAS 100 from our list on that spreadsheet. But you've got a couple of different analysis you guys can decide to work with. Remember, if most people are losing at trading because of over trading, what I'm trying to show you here really simplifies that. It takes 20 minutes of your time twice a month to say, what if I just took these entries, applied my rules and my management, and let it go? I didn't micromanage, I didn't babysit, I didn't overtrade, I didn't overthink, I didn't overanalyze, I didn't over-research and watch 9,000 new strategies and cool tools and everything in between. I just did this one thing. Got really good at the action and let the results come. That's kind of the purpose. So again, I want to mention, if there's some idea you have in terms of these 20-minute calls I'm typically doing on Tuesdays, the first and third Tuesday of the month, that you would like to see, that's going to achieve the purpose of, hey, trading is easy. Like, well, how can we help you see that a little bit better? Please let me know. Calling out trade ideas is great, and I tend to be pretty good at it in my morning classes as well. But it's more than that. It's how do I best show you that it just comes down to, regardless of the strategy, it comes down to seeing the levels, being able to manage accordingly, and being able to do it in a duplicatable method. That's it. You need some good math behind there in terms of lot sizes and risk and reward, but that's all you need to be a great trader. So, hope this video is helping you. I hope you're having a beautiful, happy Wednesday. Take care, God bless, and I will see you on the next one.